Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analysis Update for the 20th of September 2011. Hi guys, going to go over the majors this morning as per usual, starting with the Euro against US dollar on our CTC strategy template. Okay, so let's start with the daily. What's been happening? Well, we all know it's been coming to, price has been trading to the downside. We saw 100% of the fib extension. And then we had a 61.8% retracement, which took us to the top ends here at roughly 3900 and failed to materialize or trade higher than that. We had this bearish engulfing or bearish harami formation on this upside movement, and Sunday night Asian market opened and we were down negative. We were well down below the previous day's or Friday's close, and price continued to the downside. However, during the latter part of the US session, we saw price consolidate to the upper end of the wick, forming the spinning top. So long wicks on either side, and more price actually happening at the top end, slightly less wick, as you can see, at that area. And then, which happens to be this indecision area here too. So clearly, an area where there was indecisive took place, and this morning on the Asian market session, pretty much seen the Asian market fretting a bit what happened on the European and US session, and the drive continued to the downside yet again, engulfing yesterday's trading range and making, or literally testing yesterday, the prior morning's bottom. So just literally grazing the bottom of it. So we're likely to see further downside movement because of that, testing an area of the 3600, psychologically a round number, and CTC is well extended to the downside. Now if we zoom out, just have a look and see exactly where we are on the chart. I'm just going to grab that and delete it. There has been some consolidativeness taking place at the current area, 13,500 or even lower here. You can have a look that we go through December, latter part of September of last year, resistance, support, resistance, support, here at 13,400, very strong area of price support and resistance. So likelihood, if price can break through this consolidation bandwidth here, and then ideally 13,400 will definitely be a potential target area for this pair as our first target. And then if you look further back, roughly 12,900 sticks out a lot more. There's a slight consolidation between that at 13,100. If you want to put that in, then go for it. Consolidation around those edges, but 12,900 being the most important one here. So we have definitely food for thought in terms of price action movement. Ideally got to break the previous swing low in this case, or the low of this candle here. So breaking below the actual body at 13,700 or the low end of 13,500. There we go, 13,500. Just make it nice and thick. So we could look at potentially price trading to that low, but we have to break yesterday's low in order to see that. So breaking yesterday's low, are we at the bottom end of this? Yes. So there are some areas that we can trade to during the course of today, intraday. So let's have a look. Intra 4 hour in particular, all the negativity that we saw during last week's trading session. Then we had the pullback, so we had higher swings. So swing high, swing high, swing high, swing high. Then we had this bearish engulfing at a ceiling level. Price rolled over at 13,900. We know we had a serious level of 13,900. This wick, more happening to the bottom end than the top. Same again, the next one, little shooting star, bearish harami. Sorry, there's a little evening start pattern, and then we had actually, by doing so, we had this little squeeze pattern, breakout, 50 period moving average in the play, bang, CTC still in our favor. We had a break to the downside, and yesterday we saw a really nice push to start with, then a consolidation during the end of the day as we've gone into the Asian market session. So as things stand, ideally there'll be our long-term target here, intraday of 4 hour, at least the 13,500 mark. It's not too far off. CTC's back in our favor again, because you can see the CTC, we had the blue arrow, blue bars at one stage. But now we have everything in our favor, so we're looking back down towards the 13,500 as our first potential target intraday. So that's what it's going to be at the moment. Ideally we want to be breaking the Asian low, which happens to be yesterday's low at roughly the course of the day. So just put that in. Swing lows depicting price action chain. There we go. Swing low, swing low, swing low. And these are getting lower now, so you can see price action is really dipping off. But ideally we want to be trading intraday 30 minutes. We need to see a break below 13.59 before we see any further attempts to the downside to at least our next potential target here at 13,500, which is 100 pips away. So break of this, this area here. You can do 13.59 because you've got all these little wicks, but a break of that and close with bearishness in sentiment would look at ultimately the 13,500 being our first target intraday for this pair. I'm just going to bring in the 30 minutes time frame again, and I've plotted relative strength index on this chart to give us a potential heads up. Now notice as we've gone into this bottom, and you can see price has been moving to the lower, forming lower, well, testing prior lows. You'll notice that RSI has been oversold in this period here. So for this first part over here, RSI was pretty much bouncing on it, so we could see a correction heading our way. The more it touches, there's more likelihood of a bounce, and psychologically looking for that potential price support for that bounce, and sure enough we had it. But through this part over here, as price has been moving higher and then falling lower again, RSI has been forming higher highs. Okay, so slow down, but it's still below the 50. And as you know, RSI, as long as it's below 50, then we should be looking for bearishness. If it's above 50, we should be looking for bullishness. And because we're back below the 50 again, and we're still below the 50, put it that way, then we should be looking for potential further downside movement. So as long as it can stay below 50, and RSI and price can break below this support level here at 13.59, then we could look for further attempts to the downside. However, if we carry on along here and it bounces, and it starts to break above the 50, then what we could be seeing is the first signs that we're looking at potential change in market sentiment, and we should be looking for ideally a bounce to the upside. And we could be looking at roughly 13,700 as our first target, because we've had 1, 2, 3 attempts just recently over the past couple of days. Okay, next on is the sterling against US dollar, good old cable. Let's have a look at the daily. Here again, like its euro counterpart, we've seen further selling going into the Asian market session last night. Lower swings, bit of hesitation crept in here, slight support. We had bearish engulfing, spinning top, and a bullish upside moving, cancelling this, and then we saw a further spinning top once that happened. Notice price action really pulled higher to prior supports, resistance levels, and failed to materialize, and we saw price action trading at the bottom end of the wick. Further indecision, and then we had the decisive candle on the Asian market open on Sunday evening or Monday morning, and then that pretty much really rallied to the downside. Then we finished off with another spinning top or doji, but Asian market session has taken it lower. And there's a lot of news coming out that Chinese banks have stopped their FX swaps tradings with some European banks, and we've heard further news that the Standard & Poor's has actually downgraded Italy's sovereign sovereign debt rating, AA1 from an AA+, so negative. Very well, just goes to show we have known for a while that Italy and Spain are the next ones to default. Well, cry for funding, and yeah, it doesn't bode well how, in Eurozone as things are happening. Last thing you want to see is this happening. It just proves a point. And yeah, so further selling for the pair. We know that price is ready to the downside. If I zoom further out, you can see that this movement here on cable has been very, very, very drastic. But ultimately, we're looking at our next goal, which happens to be the strongest of them all here, just below the 13,3500 or just above 13,3500. A very strong prior swing here, a lot of support through these areas, going through the latter part of November, December of 2010 and August, September of last year. So that's going to be our next port of call. There is a slight hesitation in between that at roughly the 15,500 mark. So that'll ideally be our first target for this pair as we continue to head lower on the daily. CTC is all in our favor, so long-term trades are still on. And let's have a look at intraday. 4 hour in particular, you can see beautiful swing lows, price action depicted here, moving averages helping a lot, forcing this pair lower. There we go. If I put the line swing low, swing low, swing low, swing low. Bit of hesitation through here. A lot of potentially people taking profits. Wait for the break. We get our signal, bearish engulfing, and further selling. This movement now, unlike before, becoming more hesitant as we've head lower. For sure, people are going to take a lot more profit. We had another support area here, a lot of wicks to the upside, dictating or confirming is a better word to use. Further negativity, indecision, but trend line support acting as a ceiling level and pushing it lower. Going through this morning though, we've had a support 1, 2, 3, 4, going into our 5th hour now. 20th hour, apologies, each one of these is equivalent to 4 hours of support at the 156700 mark. So that's going to be a support level that needs to break. So make a note of that, mental note. Go to our 30 minutes, 1567, roughly around here. So a lot of support in that area. Now it's been a week or so, but support through here nonetheless, and we need to be addressing that. We need to be trading through that. If you look at the squeeze now, this price is going through. If you look at it that way, for example, price has just literally broken its head through now on a 30-minute chart. We'd like to see price continue to do that, to fall lower if possible. CTC in this time frame is still giving us further shorting opportunities. Now we would like to try and get through all this bandwidth first. We don't want to be triggered into any trade. So look, you can make money in this part. I'm not saying you don't, but we don't want to be caught in this upside movement. So what you can do is you can plot a relative strength index on this if you really wanted to definitely give you confirmation. So let's just do that. Just add it to the top of your chart. Okay. So as you've been going into the 30 minutes, notice we need to see price further lower. RSI tempting the lows as price is going lower. So we can see that for the first part. Yeah, that is that perfect. But you'll notice that as we've gone lower, this one over here becomes oversold. And we hit the 30, and it means we should see a change in the market sentiment. Yes, we do. We have this bearish engulfing, followed by 2 indecision candles, followed by bullish upside, which becomes our morning star, and we have a reversal that takes place. Then going into this little session over here, we've seen price, the RSI strengthening. So this over here is exactly that what we're seeing here. Fantastic. But you'll notice that just recently RSI is going to poke lower, and as long as we're trading below the 50 period moving average of 50% line here, then we're still classified as bearish. Okay, so as long as it trades below that, and CTC is in our favor, we have a blue candle. We don't have a blue. We have a blue arrow, but we don't have any blue bars or anything like that. We still need to have a red arrow. We had it before. We had the blue. We need to see a new red arrow here on the 30 minutes. As long as that's trading below, then we should be looking for further downside movement here. Break below this psychological area here at 1566, and then looking for this. But ultimately below that, then it's in better. There doesn't seem to be less noise at that level, and ultimately, if that's the case, swing, bounce, 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 break below that, then we could be looking at roughly here at 1560-100 as a potential target for intraday. Next up is the US dollar Swiss franc daily. Yeah, that upside movement is still in play. We saw this hesitation here at this level, and we thought, well, could see a dramatic pullback at the 8900 mark, and reason being that not only is it institutional moving average here that was in play, and we started seeing the shooting stars, but we also have price support and resistance at this level going back over the prior months. Support, breakout, resistance, continuation here again, resistance, and a fall to the downside. We all know that the US dollar has been falling over the past year or so against the Swiss franc, as everybody's piled into it because of the safe haven, as the markets got worse and worse, progressively worse over the months going into this year. But we saw how the Swiss government can and will and shall do whatever it takes to keep its currency in their hours at parity or at the proper price level. They thought it was well over bullish. It wasn't valued at that, and they took drastic measures to change that sentiment, pegging their currency and saying, listen, everybody, we don't like it, well, tough titty. And sure enough, we saw the US dollar rally on that after attempting a prior support area here back here. So we had this little squeeze breakout here after price rallied, then a bounce, then a reattempt, so telling us that market sentiment was still looking favorable upside. Then the 80 came into play. Little hesitation here. Then we saw 1, 2, 3, 4, 5, almost a full week, 2 weeks of hesitation at this level, and then we had a breakout. Rally to 8300 would happen to be a price support and resistance. Pulled back. We're hoping that pullback was going to set us back onto this trend line, which happened to be prior resistance. New support, it failed to do that, but it failed to break below the 78. It would happen to be a previous hesitation area or consolidation area, and then poof, woke up one morning and only to find the Swiss government had enough of all this playing around and hoo-haing and said, no, we're pegging our currency. And sure enough, it took off like a real shooting star. Hammer here beforehand, and the indecision probably gave us an indication we could see something happening. If we had drawn our lines here, we wanted to see this. I don't think a lot of us saw this happening. You might have been able to get hold of this on a 5-minute shot, but I think by then it actually really moved. This engulfing here literally took 15 minutes to occur. It was crazy. But then since then we saw this the momentum, everybody else piling in at the last moment, and sure enough it took it higher. But price action pulled back, and we thought, well, it could literally fall over and we could see a reattempt to the lows. That failed to materialize because the momentum was still there. I think the overall market sentiment was still looking further upside. So we saw a slight consolidation as people were taking slight profits from this initial extension. We saw shooting star indecision, bearish engulfing, then we saw a slight pullback. That pullback failed to materialize. We saw bullish engulfing a couple of days ago, and yesterday's candle we saw a reattempt of this institution moving average, and it closed lower. So price action still moving. And then this morning, an Asian market session, the break higher. Asian market is actually opened higher and continued to go higher. It hasn't pulled back, so momentum is still there. There's still favorable upside movement for this pair, and they're heading towards 8900. A breach of 8900 or 8950 in particular would be fantastic for this price, because now that we've traded above the institutional moving average, psychologically that's just going to make everything far better now, and you're going to see that further people just pile into this as we move further into this week. Next targets here for this pair, roughly the 93.50 ideally, so a lot more clean air. There's a slight consolidation here. If you want to, between 92.50 and 93.50 there is consolidation, but a lot more open air, a lot cleaner to trade. So first target, second target here at 97.50 as price continues to the upside. Intraday, let's have a look at that. 4 hour, ideally you want to be trading above 89.50. Get above this prior resistance level here. You don't want to be trading into resistance. It's far better to be trading on the other end of resistance. So we'll bide our time. You can still make it to the top here. Is enough here to make your 20 pip spread plus, well, 20 pip target plus the spread? I don't think so. Rather bide your time. You can see swing highs, higher swing, great. As long as that keeps up, momentum's great, then we should see reattempts of those, or reattempt of the institution moving, well, keeping above the institution moving average. Very, very important. That's where price is trading right now, which is at the 8800 mark. If we can stay above 8800, then look for 8950 to be breached. Nice bullish engulfing over here would be great for market sentiment. It'll just tell us that the big money's at the table now, and we should just be trading with them, not against them. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily. Interesting. You can see quite clearly that price has been finding support at this level here, at roughly the 76.30 or 40 mark, and we had a slight pullback, but that failed to materialize, and price has been back down at these levels again. Not looking rosy for the US dollar against Japanese yen, as people still look at the yen as a safe haven and been piling into it, because ever since Swiss franc pegged their currency, everybody's been looking at the Japanese yen as a potential area to invest in, which doesn't bode well for Japanese yen. Like its Swiss counterpart, known to be a safe haven. Are we going to see something happening soon? Is the Japanese government going to grow some balls and try and stem this downside movement? If we see a break of 76.40 or 50, yeah, it's last port saloon. We haven't been below these areas for eons. Price has been making lower swings. We haven't traded this low. If I go to a weekly chart, let's see if it brings up a weekly. You can see we're trading at an all-time low. 2002, we've just been hemorrhaging, and price will make a new low if we see a breach of this level here at 76.50. Potentially looking at possibly the 75.50 mark as our first initial target on this pair. So not looking good at all for the market. So will the Japanese government intervene and say, heads up, we need to start pushing price higher? That remains to be seen, but we're still testing these levels. The CTC is back in favor with us again. We went through a bit of a consolidative range after the Swiss government pegged their currency. We saw the US dollar rally on that, but that failed to materialize. Saw a lot of resistance here at the 77.70 mark, and price just fell back as the 50-period moving average came into play, and we're back down around these low ends of the wick. So we're consolidating yet again. 76.50 and 7700, a lot of consolidation in this area. Breakouts, yeah, in between that, but failed to materialize, and we're in this very consolidative area at the bottom end of the trading range. So you can see if we just box it. I love boxes because it just keeps me out of trouble. There we go. Not interested until we see a break higher, and not interested until we see a break lower. Otherwise, it'll just consolidate in this range. That's it for Japanese yen. You don't need to read more into it. If you want to trade the consolidative range, be my guest. There's just far too much volatility at that level to really gain any profits. I like to see a definite break below 76.40 and a definite break above 7700. Ideally above the 50-period moving average. If there's even going to be any upside, we might be surprised. Japanese government might just pull something out the bag. We see intervention or some sort of break well above the 77.70 in this case, and then we should be looking at ultimately the 80 target as our first port of call. We could see 79. We've been there before as our first stop before we head to 80, but 80 is our long-term support and resistance. The prior long-term support and resistance that we breached, and we saw the downside. So until then, got to just sit on my fingers and be patient. That's it, guys. Hope you have a fantastic trading day today. Please be aware of any news. We have some news. We have Euro with a lot of news out this morning. We've had some figures from trade balance figures in Swiss franc, really negative. They're expecting a negative figure, but not as negative as they thought it would. So trade balance figures were crap, excuse my French. German PPI month-on-month figures, they're expecting a lower forecast, but it was crap. Well worse than expected. So things aren't really looking good for the euro, and we've seen that sell-off occurring. Got CAD and US dollar this afternoon, so heads up, be aware of it. More news. Spain's been downgraded by S&P on their sovereignty debt issues from a +1 or A+ figure to an A minus, which is not great. But yeah, things are starting to boil up. We could see things really getting negative soon. So that's it. Have a fantastic trading day. Make sure you follow the rules of the template, back it up with sound money management, and you're in for a winner. Keep well and trade serenely.